This credit score mistake cost one of our students $10,000 in interest. And 47% of people are making this mistake right now. But here's what's crazy. I fixed this with just 2 moves that took me no more than 10 minutes. And my goal today is to teach you the 6 credit factors that actually matter. I'm also going to reveal the exact trick that got my 2-year-old daughter credit offers. Yeah, you heard that right. And of course I want to accept those offers, but you can use this to your advantage. Look, whether you call it FICO, Vantage Score, or credit score, it's basically all the same thing. These are just different credit scoring models, and for the most part, they follow the same rules with a little bit of differences. And after helping thousands improve their credit score, I realized that most of you are focused on the wrong things to improve your credit score. They chase the actual score, not the actual inputs that generate the score. They're focused on the output, not the inputs, and that's exactly why they struggle. And if you understand the 6 inputs that actually matter, your score is a natural byproduct of those inputs. So let's break down what actually matters and what actually doesn't. The number one and most obvious credit factor is your payment history. This accounts for 35% of your score. That is over 1/3 of your credit score reliant on this one factor. So whatever you do, do not miss a payment. But here's what nobody tells you. It's actually ridiculously easy to nail this. Just set up automatic payments to consistently make payments. Just set your automations up to have your credit card payments automatically withdrawn, and you'll eventually build up the payment history over time. You literally set this up one time and forget it. And if you don't do that, at least pay off your full balance every single month. You want to get in a good habit of paying this off in full, or you're going to be facing a lot of interest. And those high interest charges down the road are going to eat you alive. I just got off the phone with one of our incoming students that had over 12 credit cards with high interest. That is somewhere you do not want to get to. We want to avoid high interest debt at all costs. That's exactly where the $10,000 mistake I referenced earlier came from. Letting balances roll over. So make your life way easier by setting this in autopay. I've done this my entire life, and I know you can too. Payment history has a high impact on your Vantage score. And for any other loans that you have, car loans, student loans, mortgage, make sure you're making on-time payments for everything across the board and automate those ones too. Number 2 is credit usage. And this accounts for 30% of your score. And just because you have it does not mean you need to use it all. This is where people mess up. Credit usage is your total balance divided by your total allowable limit. So if you have a balance of $200 and you have a limit of $1,000, that means you have a 20% credit usage. Simple math, huge impact. Credit usage has a high impact on your Vantage score, and it's pretty common advice to keep this under 30%. That's a rule of thumb that everybody talks about, but here's my extra credit tip number 1. My suggestion is to keep that under 10%. So if you have a $10,000 credit card limit, I would never go above $1,000 at any point in time. This one change can boost your credit score by 50 points in less than 30 days, especially if it's changed from the previous history. And here's another side note to reduce your credit usage. Not only should you be paying off your debt throughout the month, but you also can request a credit limit increase. This is the hack nobody tells you about. I just go into my Chase app, and I used to go into my Discover app back in the day, and I would just simply request a credit limit increase. I got up to $30,000 in college, and it wasn't even hard. Trust me, the credit game is super easy, which is why I don't spend a lot of time focusing on it. And a higher limit means a lower credit usage, which means in turn a higher score, even with the same spending. And speaking of crazy credit situations, my daughter, who's 2 years old, is getting offers that are massive. She is 2, but there's a reason for that, and I'll explain in a minute. Number 3 is credit history, and this accounts for 15% of your score. The older your credit, the stronger it is for your score. Time is literally money here. Average age of credit is a medium factor in your Vantage score. You can use something like Credit Karma that will show you how many accounts are open and how long they've been open for. It's free and it shows you everything. But please remember this. Don't compete with these crappy rules to increase your limit by extending your loans. We want to pay off your debt, let me be very clear. We don't want to extend the time of the loan. Your credit will naturally be good if you have good financial habits. So don't play the funny game that the credit industry wants you to play, because a lot of people gamify these rules way too hard. And as a result, real life happens and they get in a really bad situation. So pay off your debt. But the only way to improve this category is by time. A common average age of credit is about 5 years. A great average age of credit is about 7 years. And an excellent age of credit is around 9 years. So it's best to start this process early, and then you'll have time on your side when you can leverage things later. This brings me to credit tip number 2, the one about my daughter. Add your child as an authorized user on your credit card. This is completely legal and incredibly powerful, but every credit card company has different rules around this. But the most important thing about this is that the credit card company is actually reporting the social security number of that child file to the credit bureaus. Because if you're not actually doing that, you're not actually building credit for them. They can still use your card, but you're not building credit, and that's the whole point of doing this. It's not to let Logan go spend money wherever she wants, although she would probably like that. I personally know Chase Bank does not do this, but Capital One does. But again, check your specific credit card company and make sure they actually report the social security numbers to the credit bureau. Your kid inherits your credit history. So my 2-year-old, when she turns 18, she will have perfect credit. And that's exactly why she's going to be getting great offers. Not that she'll accept them, but whatever you do, don't just go open a new credit card just because of this. It's not that big of a deal if you can't do it. Financial literacy for that child will mean much more. Number 4 and 5, new credit and credit mix. Each of these account for 10% of your score. So together that's 20%, but these are the least important things. Most creditors like to see a little diversity in a credit profile, just to be sure that you can be trusted with different types of credit. But my goal is not to overcomplicate these credit factors, and I don't want you to be a dog chasing your tail forever to win the credit game. If you have something like a credit card or a house, maybe even a student loan, you already have the natural mix. So just focus on paying those off. There's no best amount of total accounts to have opened. The biggest thing is to be mature and be responsible to pay these off in a timely manner. And eventually, hopefully, you have no debt. That would be the goal. Now, additionally, you're not going to want any credit inquiries or derogatory marks, because these things impact your score drastically. This is where people get really hurt. So for credit inquiries, there are 2 types. There's a soft inquiry and a hard inquiry. A soft inquiry is a soft credit pull, which basically means you've given authorization for somebody else to pull your credit. This doesn't have a major impact. This is a pretty common thing that happens in a lot of pre-approval cases, something like a car. A hard inquiry is a hard credit pull. This is when you give somebody else the authorization to view your credit report for the goal of obtaining a new line of credit. And hard inquiries do show up on your credit report. However, they do have a lower impact on your Vantage score. At the same time, you do not want too many of these in one period. And these roll off your credit report every 2 years. And they usually only make an impact on your credit score for about a year. But I see this often when people are buying a new car. They tell the salesman they're ready to make a purchase and they're going to finance that car. And that salesman is going to go contact multiple lenders, and they're all running different hard inquiries. I've seen people get upward of 6 hard inquiries in one day, and that can be detrimental for the individual. So be very careful there before that car salesman goes to their credit buddies and has all of them run your score. And then derogatory marks. You absolutely never want to see a derogatory mark on your credit report. These are the nuclear bombs of credit scoring. These are things like late payments, charge-offs, accounts and collections, bankruptcy, civil judgment, debt settlement, foreclosure, and even tax liens. And these derogatory marks can stay on your credit report for up to 7 to 10 years. And in some cases, indefinitely. These have a high impact on your Vantage score. There are some strategies to be able to remove these, but I don't want you to even get to that point. Lastly, one important tip I want everybody to take here is to download your annual credit report every single year. The goal here is to check that everything is complete and accurate and you don't have any cyber criminals attacking your social security number, because sometimes cyber criminals can take out debt on your name before you even know. And the goal is to obviously catch this before it destroys you. And you can obtain a free credit report at all 3 bureaus, TransUnion, Equifax, and Experian at annualcreditreport.com. And I will put that in the show notes below. And let me be very clear, this is the only official website you can do this at. Do not get fooled or scammed by lookalikes. Remember, credit should be easy. Do not overcomplicate this. Good financial habits and good discipline are going to lead to a naturally good credit score. And here's something nobody ever talks about with credit. Of diminishing returns applies to credit scores. Once you're over a 740, there aren't a lot of additional benefits from somebody that has a 740 and a 760 or a 760 and a 780. Once you're over that 740 mark, you're pretty much good to go. You get the same interest rates, you get the same approvals, the same everything. So do not obsess over a perfect score. So just focus on staying over 740 and go enjoy your life. So at the end of the day, these 6 factors plus avoiding derogatory marks and credit inquiries, that is the entire game. Payment history, credit usage, credit history, credit mix, new credit, and staying clean. Master these and you'll never end up paying $10,000 like one of our students did. So if you have any questions on credit, put those comments in the section below and I'll make sure I get back to them. What is your biggest credit mistake? Drop that below as well. I will read every single one and get back to you very soon. And I will see you next Monday.